Welcome to the Hamsi Analytics Daily Market Commentary. I'm Pablo Navarro. Today is Friday, June 8, 2012. For the market internals, the New York Stock Exchange advanced decline differential closed at 1,133. The Nasdaq advanced decline differential closed at 808. There were 20 new 52-week highs for the S&P 500 and 4 new 52-week lows for the S&P 500. For the volatility, there were 323,000 contracts traded on the VIX today and 45 million in total premiums paid. For July, the dollar-weighted put-call ratio was 1.02, with 31% of the total premiums paid. For August, we saw a 0.31 with 45% of the total premiums paid, and September a 0.28 with 16% of the total premiums paid. We have a special offer by TradeStation. Get your Hamsi Analytics proprietary indicators paid by TradeStation. Contact Active Traders Office in Chicago, Peter Albino, at the number listed below. Okay, here we have the daily chart for ES. You can see we had a big update today, very nice. We were up 1%, 13 handles, closing at 1323, very nicely. It was exactly at the high of yesterday, almost making an outside day. By one tick we missed it, but it was pretty good action today. In the afternoon we got and make new highs almost throughout the afternoon after selling off pretty hard on the open. You could see here on the moving averages we held the 10-day moving average at 1300 basically, and then just rallied the whole day, which was very good. On SPX, you can see here we had a good day. We bounced off the 10-day moving average, as I mentioned. Next target from here, we're looking at the 1334 level. It's going to be important, 1336 on the SPX. That's to make a higher high on this leg. And then we're looking at the 1341, which is a Fibonacci level, the third 23.6. Those levels are going to be important. On the downside, we're looking at the 10-day moving average and the 20-day moving average, basically all of them down below, so that's good. On the weekly chart, here you can see we had a good week, almost an outside week, but the important thing is that we came back, we finished at the highs, was good. We're gonna have to look at some resistance on the 20-week moving average, 1360. That's going to be important, but again we first need to clear the 1336 and 1340 level are going to be key here. Now on gold, on the daily chart, huge reversal today. We sold off last night pretty hard and then we closed higher, not much, but again was positive. We took out the 20-day moving average and the 10-day moving average, closing against it. So we're looking for the 1621. We mentioned that yesterday as a resistance at the 50-day moving average. So that's going to be key to break that to the upside. On the weekly chart for gold futures, again we're failing at the trend line that now is acting as a resistance. So that's going to be key to break to the upside, which is at these levels right now. No, it's at 1650. It's going to be next week, so that's going to be key for breaking that. But first we need to break the level that I mentioned on the daily chart, which is the 50-day moving average. On the downside, we're looking at the lows that we've made last couple of weeks, 1530. Those levels are going to be important. As you see, the 100-week moving average holding pretty good, has some support there, so those are the levels to watch. For silver, here we have the daily chart. Again today reversal. It was good, not as good as silver, but again we did see some bounce of the lows, closing above the 20-day moving average, which was positive. Again, too far out, the 30 level, that would be the support right now. We had two big up and down bars this week, so that's going to be important. On the downside, if the 20-day moving average holds, could be a good entry point until the 50-day moving average. If not, we're looking at the 2630 level like we mentioned, like for a month now. On the weekly chart for silver, basically a doji, we didn't do anything, not up, not down. Some consolidation around the 2850 level, we'll see what happens. Looks like the 150-day moving average on the week, it's holding at the 27 level right now, so we'll see what happens next week. Last chart we're gonna look at, the VIX. Here we have the daily chart for the VIX. We closed down for the day 2.25 at 21.23. That's not bad, not good. We failed to break the 20-day moving average to the upside today, which was positive for the market. Again, we need to break the 20 level and see lower levels of volatility in the market. Hopefully on the next week that we could rally there. It's gonna be an important point. On the weekly chart for the VIX, you could see here a big red bar. We basically went from the 200-day moving average to the 10-day moving average. That was the range for the week, a 6-point range on a $20 index. So that was big. Again, we need to see lower than 20 or higher than 27 for here on the VIX. Have a great weekend. I'll see you Monday.